Hey guys, Kieran here coming to you live for this week's message where I want to talk about why you should invest in real estate in 2021. Now, a lot of people think about real estate, right, as a great investment, a great asset class. They also think that sometimes when the market is really hot or when everybody's talking about it, maybe it's not necessarily the right time to get into it, right? No matter where you stand on this, I'm here to tell you a couple different things from a practitioner standpoint. And one is this. Real estate as an asset class, a means to grow income, to build wealth, to experience tax advantages, to really seize the depreciation benefits, all these different pecuniary, what we call monetary benefits, as well as the tangible aspect of the asset, make real estate a really attractive investment. And right now, particularly, depending on what asset class or what area you're in, I also think it's a really attractive time to be investing in real estate. So, several different ways that you could do this, right? As a real estate investor, you can very passively invest in what we call REITs, real estate investment trusts, where you buy a share much like you would in a mutual fund, and it's a fund that owns several different income-producing commercial real estate assets. Another way to do this is through syndications, where you also passively invest, but you do so by partnering with a general property developer or a general partner. In this case, you will be partnering with somebody who presumably you trust, you believe that they have the expertise, they have a great investment thesis and model, and they're going to go invest your money alongside theirs as well. So they have skin in the game, they have expertise, they bring other resources, they secure the deal, right? So they bring certain things to the table, and you bring certain things to the table, namely your capital to help get these deals done. That's another way. A third way is to invest directly into real estate, but this, I will caution, is for more sophisticated investors, those that really understand what they're investing in, understand the markets in which these assets reside, understanding the different forces, macro, micro, regional, state, and national, at play that affect the value of real estate, right? Because there's a lot that goes into understanding the product, the business model, and the market to successfully evaluate whether or not an opportunity and an investment is attractive or whether it's not, right? So those are three vehicles or ways in which, the main vehicles and ways that you can get exposure to the real estate asset class, right? One, completely passively through REITs, buying shares in mutual funds that other experts and companies manage, right? And that share price can go up or down, will pay a dividend generally, and you own a piece of that fund. The second way, right, is through what we call GPLP structures, general partner, limited partner structures, where you're the limited partner investing alongside a general partner, a developer investor on the ground that has the expertise, the skill set, the experience, hopefully, and is also investing their money alongside yours. And the third is to invest directly in real estate as the general partner, the principal, the investor yourself, whether it be a duplex, a 10-unit apartment building, a hotel or resort like I own, or some other form of commercial real estate, mixed use, retail, industrial, what have you. And that, again, then you could be raising money through limited partners, friends, family, small private equity fund, or other source of equity to invest alongside you if the capital raise is larger than you can afford. So those are three ways to get involved and get some exposure to the real estate market. Now, reasons why I like this asset class are that I have personally a lot of experience as an operator, both of hospitality properties particularly, but also multifamily as well. And starting my career as an agent and broker also gives me a knowledge of markets, contracts, the debt and capital markets, and obviously going to school for this at NYU's Graduate School of Real Estate for my Master's in Real Estate Finance and Investment helped as well. But you don't need all that experience, those credentials, all that stuff to get involved, to get in the game, right? You can maybe start with doing this passively, but be careful because the world has changed and the market has as well during this pandemic, during 2020 here and coming out of it into 2021. And it really depends on what part of the market you're in, where you are geographically, what sector you're in, etc., whether you've been impacted negatively or positively by the pandemic. For instance, our hotels in upstate New York are doing really well, having record months, because people want to leave the cities and go to safe, clean air environments. That's really helped us. But if you're on an island, if you're a big box hotel in a city, if you're event-based, you've had a really tough time, a really challenging last, 12 months. So again, Educate yourself, be around the right people, upgrade your room, your network, invest in the right programs, be around the right people, read the right materials, books, podcasts, etc. Do your research and build a working knowledge of real estate, what it means to be an investor. Then understand your market intimately that you'll be investing in. No matter what of the either of the three vehicles, right? No matter which one you choose to follow and implement, REITs, traditional syndication deals, or direct investment yourself, you still need to know the market really well, right? Drive around it. Look at the comps. Look at your competitors. See what's happening locally on unemployment, shifts. Where are new developers building? Where are the job centers, right? What's the transit look like? Where are the leisure and the retail and the restaurants? Because where those are, demand is, right? That's important too. And then thirdly, educate yourself on the markets, the capital markets, where you can raise equity, what the debt markets are looking like, what are some of the terms, the interest rate, the different things you're able to get out there with different loan products for commercial real estate acquisitions. And again, you do this by getting around the right people, getting in the right rooms, investing in the right books and materials and courses, and maybe even a mentor to help you understand the ropes of this business. And I'll tell you though, when you understand it, there's so many opportunities in real estate to make an impact, to build passive cash flow, to grow wealth. You can make a big difference, and it can really be transformational in your career and life. So if you're not already invested in real estate, I strongly recommend you do, cautiously, safely, and after you educate yourself. Because again, there's a lot of risk out there, like with any investment, but there's also a ton of opportunity. And that's why I'm so heavily invested in real estate. I really believe in it fundamentally. So hopefully you get some value from this. If you did, it's just touching the surface. I mean, I could, riff and talk on this all day. So if you did find some value, shoot me a message. Let me know. Happy to hop on a call, chat with you a little bit about what we're doing here, answer any questions, or just generally be a resource to you as you might consider investing in real estate this new year. Thanks so much to your success, your happiness, and your freedom. We'll talk to you next time.